Luxembourg.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Dear guests, welcome to our first edition of the Luxembourg for Finance Focus On series. My name is Philipp von Restorff. I'm the Deputy CEO of Luxembourg for Finance. Today's edition is dedicated to payments. So I have the pleasure of welcoming three experts of different horizons discussing and exchanging on the current developments and future trends within the payments industry. Before kicking off, let me briefly introduce our panelists. We have Karen O'Sullivan here. Karen is Head of Innovation, Market Infrastructures, Payments and Governments at CSSF, our supervisor and regulator in Luxembourg. Previously, before joining the CSSF, she was Audit Director at PwC. Joining us from London, Simon Black, who is CEO of PPRO, cross-border e-payment specialist in the UK. Before joining PPRO, Simon was CEO at SagePay, UK's biggest payments gateway in the UK. Simon also founded a marketing software startup and held senior strategy and brand consulting roles in the US and the UK. And last but not least, here in the studio at the Chamber of Commerce, Thibault de Barsy, who is Vice Chairman and General Manager of the Emerging Payment Association EU. Previously, he was CEO of Keytrade Bank Luxembourg. He is lecturer at the University of Luxembourg, as well as at Solvay Business School. Welcome. Before kicking off the session, I would like to make sure that we have an interactive session during this hour. So I will invite you, as we go along, to respond to certain questions we ask you during this panel. And you are also free to send us your questions during the whole session, so that we can, at the end, during our Q&A session, respond to these questions. Thibault, you are the first I will be questioning today. So you are General Manager of the Emerging Payments Association. You represent, you defend, and you connect 150 members of the entire payments value chain. You have been conducting, together with Luxembourg for Finance, a study on the European payments landscape. Please share with us the lessons that could be drawn from this study.
Well, Philippe, thank you. Actually, the study, our white paper, starts from the trends we see everywhere on the globe. So basically, we see cash being replaced by credit cards and debit cards, and themselves, they are being challenged by mobile wallets and digital wallets. And we can also see the rise of a very popular form of payment, which is account to account. So examples are Trustly in Sweden or Ideal in the Netherlands. So while this shift was already underway under the pandemic, so we can only anticipate that COVID will of course, accelerate this kind of transition. So now our study is called the European Landscape in Perspective. And we saw that the perspective should be basically with the US and China. So a word about the United States. The United States is sure the home of great payment innovation and fintech players. So now everyone knows Apple Pay. It is being accepted in 60% of the retail locations in the US, and Google Pay is a champion of online payment. I could also quote Amazon Payments. But on the other hand, we have to recognize that the US market is a bit complicated. Why? Because we have 50 state regulations and we have more than 16,000 card issuers, which is enormous. So when it comes to our industry effort, they are a bit slow to act. For example, the transition to chip and PIN is still not achieved in the US. Or to take another example, they have difficulties reaching a true fast payment network at the continental level. So US, despite its fantastic and gigantic fintechs we all know, they still have a bit trouble, and they are in some ways behind Europe and Asia in contactless payment. Now, a word about China. We have Alipay and WeChat Pay, which are called super apps because they go much beyond payments. They offer insurances and other services. But those payment tools, they do not intend to stay Chinese. So now they are establishing partnership to get global acceptance. And by the way, before those digital payments, you had the big credit card Chinese company UnionPay. They have 6 billion cards issued. And they also have an international network already with 178 countries. So beware, the Chinese are coming at the world. Now, what about Europe? Well, as you probably know, within Europe, we have huge difference in terms of payment habits. And some are due to cultural factors. So, for example, people don't want to get a credit. Or in some countries, you have a stronger appetite for cross-border e-commerce. So those are important, very important factors. Or another very important point is that at the country level, we have the banks putting their efforts and infrastructure together to create, for example, a common ATM network or a common digital ID, like in Sweden. Or in France, a common credit card scheme with carte bancaire. So those are very interesting examples. So aware of this fragmentation, the European legislature has come up with a way to harmonize the market. And so we have the directives, SEPA, PSD1, PSD2. And among the multiple objectives of PSD2, we have precisely as objective to nurture new payment tools facilitated by open banking, which is basically the main object of PSD2, but also in the minds of the people who have written PSD2, they want to have a European champions that would be capable to compete with the gigantic American and Chinese players we just mentioned. So without going too much into the details of the study, because it's a country-by-country analysis, but what we see is that we have, within Europe, best practices in all the payment fields. So for example, the Nordic countries, they are the heaven of instant payment, and they have a common digital ID. The Netherlands, they have account-to-account since 2005. The Italians, they are very good in P2P. Spain is very good in mobile wallet. UK has led the way in open bankings. Or in Italy, they were very quick in accepting WeChat Pay and Alipay because they have a lot of Chinese tourists. So if you want to take their business, of course, you have to have a very efficient payment network. Now, there are less rosy aspects. So, for example, we still see chèques in France. Or in Germany, it's very, very difficult to pay with a credit card in a restaurant. But I'm sure this will improve. So, as a conclusion of our study, basically two takeaways. The first one is that the basic ingredients of successful payment technologies, they are very clear. Instantaneous execution on the one hand, and on the other hand, the openness of choice. That's the first takeaway. And the second takeaway is that we see that we have all those local champions within Europe. And precisely, they are supposed, thanks to PSD2, they are supposed to have now a playing field of 27 countries and more than 300 million consumers. But this has not happened yet. And for this to happen, they need to have technical interoperability so they can fully blossom and deliver benefits for their consumers.
So, if I understand you correctly, we have the Euro, PSD1, we had SEPA, PSD2, but still the European payments landscape seems to be very fragmented.
That's right, because we see those local champions, but basically they remain a bit too local, or they remain at the scale of a region. So basically the question is, who is Europe's Apple Pay? Where is Europe's WeChat Pay or its equivalent?
Okay, so I come back to you. At this point of time, I would like to ask our audience how long they believe it will take to get a true harmonized European market in payment services. So we now will open up these questions to you. You have to scroll down in your browser. And while you do that and respond to these questions, another follow-up questions to you. So again, why is it so necessary? And in your opinion, how long will it take to build up this harmonized markets and payments?
Well, basically PSD2 is just at its very beginning, and we still have a last step, which is going to be a challenging one, which is SCA, which is supposed to be delivered at the end of the year. So things will only really start in the coming years. So I expect at least 5 years to see the effect of PSD2 in transforming the European landscape. We also have to pay attention to all the other regulations, because that might be an issue. When you go from one country to another, you might have regulation on consumer credit, for example, which means that you have to adapt your system from one country to another, or specific tax issues. So those might be the hurdles for the current players to really become players at the scale of the continent.
Thank you very much. So could we see the results of our first poll, please, if there are any? Thibault, would you like to react on this outcome?
I completely agree. On the one hand, we can say it's fantastic that we have so many players in Europe. If we have to compare it with China, in China you have two big players. And it's supposed not to be regulated by the state directly, but everyone knows that in China nothing happens without the consent of the government. So it's great that we have so many players to start with, but definitely I think 5 years to see real changes is definitely a very good guess from our viewers.
Thank you very much for your comments. I'm now turning to Simon in London. Simon, could you add on what Thibault has previously said and give us your insights about how you see evolving the payments landscape and what you believe to be the upcoming trends within the industry?
Sure, absolutely. So as Thibault says, right now, this year in 2020, we're seeing an acceleration of trends in the market driven by the pandemic. And absolutely, we're at the heart of this proliferation of payment methods that he described, which is actually a global phenomenon. There is a lot of complexity in the European landscape, but if you look outside of China, Southeast Asia is even more complex. Latin America has huge complexity in terms of consumer payment methods. And at PPRO, what we do is connect with all of these different payment methods worldwide and manage that as an infrastructure service for leading payments companies. What we've seen on our platform, if we look at August this year versus August a year ago, we saw an increase in the number of active merchants by 100%. From 34,000 last year to 68,000 this year. So one of those trends that accelerated were merchants, companies of all sorts, retailers, but others as well, quickly getting online as a result of the pandemic. And obviously that in turn has been linked to a big change in consumer behavior. What we saw is that the one-off purchases consumers make really slowed down in mid-June. So April, May, mid-June, we were all at home buying home office equipment, home gym equipment, doing yoga classes online. But the one-off purchases, the new office chair, the new monitor, whatever, those have stopped. But the behavioral changes, so the yoga classes online, etc., those are going to stay, and many more will develop. Online education will burst forth. All sorts of government services which were provided online, paid for online previously, face-to-face, have moved online. So the trend towards not just e-commerce as we knew it, which was mostly getting something ordered and delivered to your home, but actually just consuming services online, paying for things online, that's a massive acceleration in that trend. And we'll only really see that play out in the data from a year, 2 years, 3 years from now, where we can really judge it. So how are people paying for all these goods and services? We've seen a growth across the board. Again, I would definitely recommend the EPA report, which you can find online, the European payments landscape. So Thibault mentioned payment methods like Trustly, where you pay direct from your account, growing. We see pay later payment methods like Klarna, growing fast. Paying through a wallet like PayPal, growing fast. The proliferation of new payment methods versus the traditional cards is a trend that will continue for some time. I would say for the next 5 to 10 years. In the very long term, 25 years plus, there'll be a consolidation as consumers migrate to those ways to pay which give the most value. Again, I agree with Thibault, most important to us as consumers is instant, that we have choice, that it's hyper convenient. It does take time though for consumer behavior to change, and also you need the infrastructure in place. And contactless cards was a great example of that. The technology was around for quite some time, but you needed acceptance in store, and then you needed the consumer to change behavior. I think finally, in terms of the outlook for payments in Europe and building on the last comments, I think PSD2 and the Open Banking Initiative definitely lays the groundwork for more standardization, more harmonization in Europe. I think there are some interesting private sector steps like Alipay and 6 European mobile wallets got together to form an interoperability standard. You have interesting, exciting startups like Blue Code looking to standardize for Europe, a European-owned payment acceptance method. And in very early days, but the recently announced European Standard Payment Initiative, I think will yield fruit. I'm a bit less bullish than Thibault about how long that will take to have an impact. I think it's more like 10 years plus rather than 5 years. But in the short term, I think which is great for everyone, especially consumers, is it generate a lot of innovation and dynamism. But the way people pay will continue to be fragmented. And so retailers and other organizations willing to accept payments need to ensure they're offering full choice to the consumer.
You mentioned open banking before, which is a tremendously important building block of the future of payments. So before coming to my next questions, I would like to address the audience again and ask them, do you believe that banks have fully embraced open banking yet? Please vote. And meanwhile, I'm coming to my next questions to you. Simon, what impact do you believe will have the trends that you have been describing? What impact will they have on the industry players and the infrastructures?
So I think sadly, as well as the positive trends being accelerated, as a result of the pandemic and the huge growth of online activity, you also have negative trends accelerated. And these largely are fraud, money laundering, and other activities that need to be protected against. And the best way to do that is to comply with recommended standards from various bodies, especially for a financial institution like ours, those set by the regulator. This compliance burden will increase, I think, mostly for fair reasons. So I think this is a really important response required from the whole financial industry with the various participants. And within that, less from a regulatory perspective, but just in terms of battling online crime and fraud, I think the investment in information security needs to go up. I think there has been now for a long time a focus at a certain level and a discussion around information security, cybersecurity, and the need to protect and invest. My view, though, is actually that generally organizations across the board, if you took the average, we're far below the level we should be at. So I think for the payments industry in particular, we have to ensure that we don't lose sight of the need to continually raise investment in information security.
Thank you. Do we have a representative result yet? So if you could please put it on the screen. So Simon, you see the answers on the screen. Any comments from your side?
I have to confess, I think with me connecting remotely, I can't see them. So I would need you to give me the headlines.
Tell them to you. So almost 60% disagree completely, and 19 neither agree nor disagree, and 16 agree, and some 7% agree or strongly agree. So the overwhelming majority is not in line with the fact that banks supposedly have fully embraced open banking yet.
Yeah, I think that's probably a fair judgment. It's a massive change for banks, and it impacts their commercial model potentially. I think, like with any of these changes, you had those that were saw it as an opportunity and embraced it, and those that are resisting. And I think it's a fair judgment by our audience.
Thank you very much. So we now had two business perspective. I will now turn to the other one, to the regulatory perspective. So Karen, first of all, what awaits us on the regulatory agenda in the coming future?
So I suppose as a regulator, having to answer questions about the regulatory environment or agenda is always a difficult one, because most people who are listening are cringing and dreading more regulation that's coming, and quite often there is more regulation coming, but I'll do my best to answer. I think I have a slightly different look perhaps than what Thibault mentioned with regards to PSD2 from a regulatory perspective. I think the directive itself, which was revised in 2015, it's been transposed by the different member states. It is a maximum harmonisation directive in the wording, at least, of the directive and the implementation of it. And the European Banking Association, so EBA, had different mandates to develop different guidelines and RTSs to aid or to assist in that implementation. So that process is more or less to the end, with the exception, of course, of the final provisions of SCA, so the strong customer authentication, which should be in place and in effect by the end of this year. So I think from that perspective, there's no immediate change to the basis of the directive or the laws. I think what's interesting is to look at what EBA is focusing on perhaps at the moment, which is more generally fintech. So that's in line with their fintech action plan, which dates from 2018, but which detail different priorities that they wanted to tackle or to deal with. And I think at the moment, they're looking more at regulation to see where it could possibly be changed or updated to foster innovation, to give, where needed, more legal certainty, be it around what is or isn't allowed, around the regulatory status of a lot of the fintech companies themselves. And as I said, to see where assistance maybe is needed to encourage or to really favour more innovation. And I think when we're looking at innovation and where they're kind of favouring it or trying to encourage it, I think there are two key aspects, is really artificial intelligence and DLT. And I think there the idea is to see how these two technologies can be used in the provision generally of payment services, so as to reap the supposed benefits of those technologies, which is faster, more efficient, cheaper service or transactions and transaction recording. I don't think, in my opinion, we'll see regulation as such. I think what we will see is different studies being performed by the EBA and possibly targeted guidance or interpretations being published, rather than fundamental changes to the regulation as it is. As well as that, EBA is also obviously supporting the European Commission in their different efforts in generally payments and fintech. And I think there one that is of particular interest is the Digital Oversight Resilience Act. And I think it touches a little bit on what Simon mentioned as well. And here it's not specific to the payment industry, but I think given the amount of technology that is used in the payment industry, it's quite important. And here it's really looking to make sure, or it's looking to see where the existing rules and regulations may need to be updated to make sure that the operators in the financial sector are properly equipped to deal with different ICT risks and threats that may come. And as well to make sure that there's a monitoring in place over the third party providers of ICT systems and services. So I think that's kind of the main kind of focus of EBA at the moment. I think if we looked locally and more domestically, I suppose in the last few months, we've issued more circulars than regulation, pure regulation or hard regulation. And I suppose it's no surprise that a lot of those circulars around AML. So not just because of the upcoming visit that we're going to have in the coming months, but I think as well to make sure that the systems are in place, the procedures are in place to make sure that we can tackle the growth in the risk of AML. So there well, not us, but the AMLD5 was fully transposed into Luxembourg law. So the 2004 law was amended to take that into consideration. And as a result, it was needed to update or amend the Grand Ducal regulation and also the CSSF regulation on AML. So it's really to make sure that all the requirements of the AMLD5 are properly transposed locally. So obviously going forward, our focus will be making sure that that's properly being implemented at the different entities. I think linked to AML is probably a more significant change, or that was included when the 2004 law was updated in March, and that's the inclusion. So based on the FATF guidelines and recommendations, the inclusion of a definition of virtual assets and virtual asset service provider in the AML law, and the creation, if you like, of a registration regime and AML supervision over those players. And that is something now that will fall under the remit of the CSSF. So what we've already done is we've developed a registration file. So in a way, it's somewhat similar to the application form that a payment institution or an e-money institution can fill in and file with us. So it's a registration file which requires certain information, particularly on the AML procedures, policies in place, and then a certain amount of analysis done on our side, and then those actors will be included on our register, which means that they will be able to offer their services in Luxembourg. So for the moment, virtual assets and their service providers and that business, it's managed or it's being regulated locally. So it's not harmonized at the moment. So by sending it, so anybody who's providing those services in Luxembourg needs to submit a registration file, and then they will be put on our register to be able to I suppose, provide those services in Luxembourg at least. And then I suppose linked to that, if you have a quick look at the European Commission and what they're doing. So apart from the Digital Operation Resilience Act that we're promised a legislative proposal for the end of the third quarter, so very soon. With regards to crypto assets, we're also being promised a legislative proposal by the end of the third quarter. So again, very soon, as we're already kind of middle of September, so the wait shouldn't be too much longer. And there, I think what happened was that they published a paper at the end of last year, and they asked for a public consultation. Almost 200 responses were received, which is quite a lot, and I think that really shows the interest that there is generally in the subject. And based on that, they're redefining or tweaking a little bit the proposal that will be put forward. So what we expect to see in the proposal at this stage is really two different things being covered. So it's the crypto assets that could fall under the current EU financial services legislation. So essentially crypto assets that ultimately could be classified or qualified as financial instruments. So it's MiFID and everything else that currently exists. And there, what will probably be required is a little bit of tweaking of the regulation as it exists to make sure that the legal certainty is there for those crypto assets that essentially demonstrate the features and the characteristics of a financial instrument can be caught under the existing legislation completely and then follow that framework that exists. I think one of the main issues there is really when we look at market infrastructures, because for the moment, it's very difficult or practically impossible to find secondary markets or CSDs that will deal or that can facilitate the issue or the dealing of crypto assets, be the financial instruments or otherwise. So part of the proposal will be some form of maybe a pilot program because until we can test how market infrastructures under the existing regulation can be applied to crypto assets, we don't know what needs to be changed to make it fully fit to be applied to crypto assets. So there I think the thinking is that there'll be a pilot program to try and give some form of certainty to essentially MTFs and CSDs for them to be able to work with the crypto assets that are meeting the definition of financial instruments. And then after a certain period of time, I think at the moment they're talking about a 3-year period, to see where other changes may be required in the existing regulation to encourage or to better facilitate that. And then the other piece is the crypto assets that won't fall under the definition of a financial instrument. And there will be a bespoke regime that will be put in place. And to basically regulate to a certain extent the assets, be it the issuing of the assets or the services that are being provided around those crypto assets. So there will probably be harmonized disclosure requirements. So for issuers of crypto assets, there'll be harmonized disclosure requirements across Europe, because here the thinking is that the regime will be a Europe regime, not a national or a series of national regimes. So really a harmonized and the same regime being applied across Europe. So that means that all issuers would be bound by the same, say, disclosure requirements. For the crypto asset service providers, or the virtual asset service providers as it is currently in our law, there the regime would be a little bit further. So currently the regime is around AML, and the proposed regime will be putting different governance requirements in place, organizational requirements maybe over the segregation of client assets, maybe IT systems and structures, so requirements around basically the operations of those entities, with a particular focus on stable coins and where that might need to be changed or additional rules included. So it's true that on one side, a harmonized regime with all these requirements means that there will have to be some form of supervision by the competent authorities. So I suppose that's kind of seen as a negative thing, because we'll have to come and make sure that things are being properly done. But the positive side is that once one of those virtual asset service providers has gone through the regime and has obtained the license that they will be proposed, they will then be able to passport their services throughout Europe, because it'll be a passporting kind of regime similar to PSD2 or other regimes we have today. So kind of the downside is the regulation and the eye of the supervisor, but the uptake really is the advantage is really the passporting abilities going forward.
So how close are crypto assets to being e-money?
Very close.
Okay.
But let me go into a little bit more detail. So I think both crypto assets and e-money are issued by, generally speaking, issued by private entities, and both may be used as a form of or a means of payment. The difference is that crypto asset may meet the definition of an e-money, but e-money cannot meet the definition of a crypto asset. So to try and see where the differences are or the similarities are between the two, I think we need to look a little bit more closely at the definitions of both. So an e-money is really a monetary value of a claim that you have against the issuer. It's something that's electronically stored, and it's used, or it has to be used as, or its purpose, if you like, is to facilitate payment transactions, and it has to be accepted by a third party other than the issuer of the e-money. Whereas a crypto asset it's a digitalized value that is obviously stored electronically, but may be used for payment reasons, but may also be used for exchange or investment purposes. And there's no requirement or restriction as to who may or may not accept those crypto assets. So it could be only acceptable by the issuer themselves. Except, of course, for any crypto assets that meet the definition of e-money, which then will be regulated and regarded as e-money or financial instruments, as we've mentioned earlier. So there we really need to look at the uses of both, or how they're created. So if you look first of all at e-money, it's a monetary value. So e-money is only issued against the physical handing over of other e-money or fiat currency, whereas a crypto asset can be issued or created against any asset. So it could be fiat e-money, but it could also be other crypto assets or other assets in general. So if it's in exchange for fiat money, it's e-money, or at least to be e-money, it has to be in exchange of fiat currency. And as I said, e-money can only be used for payment transactions. So when you're issuing it, when you're using it, it's really that the purpose of it is to make payments. Whereas a crypto asset can be used for exchange, investment, or anything else. So it's really more broad or more general use.
Thank you for this assessment. Before coming to my last questions to you, I would like to ask the audience another more general question, and this is, do you believe that EU regulation is fostering the development of the European payments landscapes, yes or no? So please give in your vote. And meanwhile, Karen, last question. A lot has been said about artificial intelligence. So in your professional opinion, AI is impacting payments. How and to what degree?
I think AI can impact payments very much the same way it can impact any other entity, be it in the financial sector or otherwise. So there's lots of different use cases for AI. I think if we look at the payment sector, there's two clear use cases that I would see being where it's most beneficial or could be most developed or mostly used. And I think the very first is on client onboarding. So I think as we've discussed, or as you've mentioned, both Simon and Thibault, things are becoming more digital. People are working more remotely. I think the current crisis and COVID shows that we will be working remotely probably for a longer period of time. So as things are becoming more digital and more remote, we need to see how we can onboard our clients. And that will need to become more digital and more remote. And I think there the use and the importance of AI is in, say, facial recognition and the linked security measures. So by using different logarithms, it's possible, or would be possible, to see, say, detect movement. So when you're looking at the screen to onboard yourself, it can detect your movement to make sure that it's a physical person and, say, not a photo or a copy of an ID or something that's in front of the screen. It could be used also to say, if the company, for instance, has the ID card of an individual, AI can be used to detect, say, the features or characteristics, if you like, in the face of that person in the picture. And then when they have the person in front of the camera, the AI can make sure that the face actually really corresponds to the picture they have. So it's a mix of taking out, say, key characteristics or movements and really image recognition to be able to make sure that it's the right person. So I think that's something that would be interesting and useful. The other real use I see for it is fraud detection. So again, fraud is something, when things are becoming more digital, fraud is something that we need to pay different attention to. It's always something we've had to pay attention to, but I think the how and the why has changed. And there, the use of AI is really its capacity to analyze historical data and use that historical data to predict patterns. And so, for instance, using, say, payment transactional data, using bank transactional data that's available, and using that to predict the pattern as to what an individual's normal uses of a card, for instance, are or are not, and then anything that kind of deviates significantly from that is being kind of flagged as a potential fraud, and then that's kind of targeting where that more I suppose more care can be taken, more analysis needs to be done, or more review processes and things like that. So I think that's very interesting. As well, because we have the AML requirements in place, so banks, payment institutions, e-money institutions have to comply with that AML or those AML requirements. So there is a need already, a regulatory requirement to monitor transactions and to detect suspicious transactions. So because of that, there's probably less of a GDPR issue as well in AI using that available data to predict those patterns and to try ultimately to detect fraud.
Well, there's a lot to come for you and the industry. Thank you very much. So could we have a glance at the result of our... So you should be positively surprised.
It's always nice to see people agreeing with us. I think it's certainly trying to foster innovation and trying to use it to develop the landscape is something that's really key on everybody's or the regulator's agenda. So it's good to see that that's been kind of witnessed or agreed with by the industry.
Thank you very much. Dear guest, we told you it will be an interactive sessions, so I hope a lot of you have submitted their questions to our panelists. My colleague Chris Hollyfield, FinTech advisor at Luxembourg for Finance, will now have the pleasure reading us some of the questions.
Yeah, thanks very much, and thank you all for your excellent questions, which we've had quite a lot of. This first one may be for Thibault. It's from Ian Hall, who is editor at Global Government FinTech. And the question is, which markets in Europe do you see as leaders and laggards when it comes to governments driving open banking? So in other words, which ones are doing better than others in your opinion?
I mean, definitely UK and to some extent Germany has really led the way in open banking. So if you want to see where open banking is most advanced in terms of solutions, in terms of use case of practices, it's definitely in the UK, which allows me to rebound to what we said earlier. When I say we are only at the start of PSD2, what I mean is that the business impacts in terms of practical products and solutions that will be offered for consumers. For now, I think most of us, what we have seen is the aggregation of accounts and the personalized financial management solution, which can be nice, but for some of us, it's not really impressive or it's not really an added value. So this is, I think, where there is still room for definitive improvement. And as we know, but Simon is much closer to the market than me, operators are faced with difficulties at an operational level in the jungle of the APIs that are being proposed by the banks. Some are good, some are not good. Some sandboxes are perfect and others are a real mess. So this is practically the challenges that the operators have in Europe today. And of course, EBA is publishing its RTS, etc., etc. But what we hear from the field is that we are definitely only at the start of the adventure.
Thank you.
Thank you very much. Maybe now to switch over to one for Simon and Karen. This is from a Robert Jarvis. Why are these pay later methods that you mentioned, like Klarna, increasingly popular? Is there potentially a risk here for increased debt on consumer parts? And how do you see that from a regulatory perspective, the increasing use of these pay later solutions?
I think, I mean, yes, there is always a risk where you're encouraging people to buy and pay later. There is a risk of indebtedness. And I think there the focus is really on the ethical behavior of the companies behind those cards to make sure that they're being properly disclosed. So be it the interest rates, the repayment terms, whatever it is, that it's properly disclosed. And I suppose in a way to work with them to make sure that the individuals are being educated against the risks in using those payments, so that maybe to avoid some of those traps at the end.
If I may add something, I think it's very important that most of those solutions are proposed as interest-free or with very low interest. So I think that compared to a rollover credit card or with a payday loan is definitely much better.
Possibly, yes, yes.
Simon, would you like to add something?
Yeah, I agree with both the comments so far. I think the one other piece, why are they growing? Well, nothing grows if it's not meeting a need. I think the question is the right one, which is, are the consumers really aware of what they're getting into? But I think as Thibault says, it's so far seems to be focused on relatively low value items. And, hopefully the companies are acting responsibly in managing it. I think the burden sits both with the payment provider, but also with the retailers who are heavily promoting these options.
Thank you.
Cool. Thank you very much. So now a question from Romain L'Oréal. He wants to have a word on the European Payments Initiative and the chance of success based on a separate credit transfer system to replace national solutions for card or online mobile payments, and rather have a kind of a unified European framework for that. Do any of you have any comments on the European Payments Initiative, perhaps?
Thibault, you want to? Simon, maybe to start with?
Yeah, thank you very much, Thibault. No. First of all, I think when it comes to a consumer payments, any large-scale initiative, even at a national level, let alone a Europe-wide level, faces huge challenges in getting a large level of adoption. So, the new payment methods that tend to succeed are driven by private enterprises who are very agile, very creative, and typically will go through many different variants and iterations before settling on a successful model. So these more large-scale programs, which have to be defined by their nature upfront, and then driving the scale of change in a relatively short period of time needed to make the cost justifiable, it's a stretch. So I think the key is it intended ultimately to be more of a framework for others to initiate on, which is really what the open banking is. or is it actually to create a payment scheme, which I think would be a lot more challenging. But I applaud the initiative, because I do think from a European perspective, it is important that such critical infrastructure is not fully in the control of organizations domiciled outside of Europe. But whether this specific initiative succeeds or not, I think remains to be seen.
Karen, you'd like to add something?
No, I think it's as you said, it's still early days, and I think there's a lot that could be done. So it really is just to follow it, to see how it can materialize in the future.
There are many things we don't know. We know that they want to base themselves on open banking and instantaneous payment, which is great. Basically, that's the way it should be. But of course, again, interoperability outside of Europe, what about it? And I also think that if everyone recognizes the political risk, I think the existing players, including the existing card schemes, are very much keen to meet the requirements of the European authorities or the ECB, so that whatever the objectives are, it can be met partially, at least, by existing infrastructure.
Interesting. Chris, do we have another question?
Yep, we do. I'm going to group two together for Karen here, if you don't mind. So the first one is from Amélie Doublé, which is, firstly, thank you for the interesting talk. I would wonder if you could give us some more insight into what the CSSF is planning in terms of, is there a national regulation planned for the issuance of crypto assets? And then a sort of similar question in terms of what's the CSSF planning from Simon Recher at Hogan Lovells, which is a regulatory sandbox contemplated, or would that be totally out of the picture?
Okay, so I think as regards the issuance of crypto assets, the nature of the Luxembourg market, I think our domestic market is too small for a really national initiative. So what we're currently doing is following everything that's coming from the European Commission. We're following and involved in the different discussions. And I think there, once we have the proposal on the table, what we will look to do, I think as we've done historically with other pieces of legislation coming from the EU, is to really adapt what's there to the local market. And I think then, so going forward, what we will probably have is, well, we will transpose whatever framework is proposed by the European Commission to really offer the players in Luxembourg I suppose the positive side of a regime, being the passporting, the certainty, and I think we will aim to do it at least the same way we've incorporated different other frameworks to date, with really giving as much flexibility as we can. I think at the moment we do spend a lot of time talking to people who are active in the more crypto or the less traditional business models, and we do spend a lot of time talking to them really to understand what it is they're doing, how they're doing, why they're doing. And I think all of that discussion and education for us is really to help us to be best armed to give as much flexibility as we can when we do need to develop a framework going forward based on whatever comes from the European Commission. I think as regards the second one, as regards the sandboxing, so I think there again, in a way it's something similar. I think sandboxing, at the moment, the limitation to a sandboxing is that it's on the national market. And again, our national market is too small for a sandbox to really flourish. There isn't enough. So yes, we have a lot of banks, we have a lot of actors in the financial services that could be used maybe to test out different services, but the market in itself is too small, which is why we have not, and it's a question that comes back regularly that we do analyse to make sure that our position is still the most appropriate. And our thinking is still that sandboxing is not the way to go. We prefer to go down the route of active discussion, interaction with people, and affording, so staying within the requirements, obviously, of the different legislation, to offer as much flexibility as possible for companies to develop their businesses. And I think in that way, I mean, even in our payment service law, there are different exemptions that are possible for smaller companies. So for instance, to test or to try new payment services or new e-money services, there are different exemptions that are available. And I think for us, that's what we want to promote going forward, rather than, at this stage at least, sandboxing.
Thank you.
Thank you. One question perhaps for everybody, which is, what is your view, it's an anonymous question, what is your view on open finance, i.e. broader than just open banking? Where are the discussions about extending the principle of open banking to other areas, open pension data, for example, or open utilities data, or so on? What are your thoughts on that?
Anyone?
Well, maybe just what I think was interesting in the way that open banking was implemented if we compare Europe, US, and China, and maybe this is an answer how to do open finance tomorrow. Basically, in the US, you have very big players active in open banking, but there is no regulation on open banking, which means that actors have come up together for strong collaboration, and the products are very successful. So basically, yes, I mean, for something to be successful, it has to come up with ideas coming from private operators. So that's one part of the model, but on the other hand, the US is not harmonized and they don't have equal access rights to the networks, banks, etc. In China, as we said, it's a hidden regulation because the regulation is done through the power of the two main operators, and they have a fantastic catalog of API. Everyone says it's the best practice worldwide, and all the operators are very happy to work with them. And then in Europe, we have the idea that open banking had to be harmonized to start with a very strong regulation, and then we see how business will take it up. So now I think it's interesting if we're thinking open finance and applying the same principles to trading accounts tomorrow or to insurance products, what should be the starting point? Strong collaboration between private operators or a kind of a seminal regulatory text?
Simon, you might add something to that?
Yeah, actually, I think the thing with banking is it covers a huge mass market, and I think it will prove in the long term to be an extremely valuable initiative. I think before going into other areas of finance, I think what would be a lot more beneficial in Europe is a common digital identity scheme. I think both for individuals and for businesses, there's huge inefficiencies and huge waste that happens in validating and verifying organizations and individuals. And Karen talked earlier about applying AI to that. I think could also benefit from a common standard across Europe that would also potentially look to link that beyond Europe in the longer term. But I think there's been a lot of success within some markets. I think Sweden, for example, if I'm correct, but I would love to see a Europe-wide initiative for that. And maybe when that's established and successful, you might let the British in too.
I think we all want to see that happening. Chris, do we have another question? I think we have still some time.
Yeah, yes, another anonymous question. Lots of the conversation in Europe obviously focuses on, regulations and also on, consumer wants and desires, but not necessarily so much on the technology. So are banks, European banks, ready from a technological perspective to actually, fully implement all of these changes? What are the participants' views on that?
Maybe Karen, you want to kick off on that one?
I think it depends. Some are obviously more advanced, more developed, more aware of IT impact and IT kind of needs than others. I think with some of the different kind of guidelines, as I said, the legislative proposal that we're expecting from the Commission within the coming weeks over ICT, I think will force the different players to become more aware, and I think it'll force them to put really the importance internally on making sure that they have a proper risk management framework and really awareness and understanding of the IT systems to really help them to move forward. I think on our side, over the summer again, we issued a circular on ICT security measures. Okay, it's transposing certain guidelines that were coming from EBA, but part of it, because when you read through it, it's a very short circular. I think it's 6 or 7 pages, so very, very short. But it's really just, we'll say, reminding banks and other institutions, not just banks, but banks and other institutions, of the requirements, of the needs, that they need to be aware of IT, that they need to understand what's happening, that they need to have the security in place to protect them from attacks and whatever else. So I think it's started, but there is probably still some more work to do to say that they're fully prepared and ready.
As a former banker close to fintech, you certainly have something to add on this one.
No, I mean, definitely most of the fintechs are there to help on interoperability or on the digital transformation of traditional banks. And on the other hand, what we see, for example, with EBI or other initiatives, is banks willing to put infrastructure together. And obviously, cloud and all the options offered by cloud is a way to have shared infrastructure capabilities. So yeah, it's definitely moving, and I think the traditional banks are extremely aware of that.
Thank you, Thibault.
Okay, unless Simon has any comments, one last question.
Please.
One last question. How many different payment methods do the panelists use right now, and which one is their favorite?
Simon, you want to start?
I'm actually using a growing number. I don't know, I'd guess maybe 6 or 7. I think, I think as a form of payment still, despite COVID, I still love contactless when I am out and about. But for online purchases, I am using PayPal more just for speed.
Thibault?
Well, a traditional credit card associated with a very strong miles program for most of my spending. Now you know why. And of course, interoperable with my Apple Pay wallet. So that's the way we see that it's not necessarily a battle between old and new payment methods.
So for me, it's the credit card as well, as you said. And I think the other one I have to say we use a lot is DigiCash. And here it's really for me, it's my children who make me use it. Because they need money they need money to pay their canteen. They're in the queue and they said, oh, I don't have any cash. They phone me and then they have money on their card. So that's one I use an awful lot.
Thanks. That was a good question to wrap it up. Thank you very much, dear panelists. I learned a lot. I hope, dear guest, you learned a lot too. I would like to thank you for that. I would like to thank the Chamber of Commerce from Luxembourg for hosting our studio here. I would like to thank you, Broadcasting Center Europe. And finally, thank you very much, dear audience, for participating. And I hope I see you at our next Focus On. And I hope you stay safe wherever you are. Thank you. Goodbye.